All right, morning everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Coming to you live this Thursday morning in the US, Thursday evening. I believe you're still in Hong Kong, right, Willy?
Morning, everyone.
Fuck me.
Yeah, I'm in Hong Kong. I'm pretty much my base right now under COVID. It's a great place, actually.
Is it still that big, like warehouse? Is it still that big, like loft kind of looking place?
No, I'm doing the great tour of Hong Kong. Every month I move to a new 1 month stay.
I know it's such a huge country, Willy. When will you ever see it all?
Yeah, well, I'm on an island right now, Lantau Island. It's this kind of suburbia of Hong Kong. It's the only kind of place that feels like, I guess, a little America or any place Western. I'm not saying that's a good thing. It doesn't have quite the grit or the feel of Hong Kong. I'm kind of getting a little like I want to hit Hong Kong again, but it's like you got a lot of room here and good views. And you can go kiteboarding apparently. So yeah.
Nice.
Yeah, it's a great place to be, Hong Kong.
Well, I don't want to spend too much time on Hong Kong. We did last time as well, but we're hearing more rumors how like democratic persons of parliament or whatever the political system is in Hong Kong are being kicked out, and China is slowly rolling over now with COVID. Less eyes, less cameras, less people in the streets. Is Hong Kong still going to be Hong Kong in 5 years?
I don't know about 5 years. Yeah, it's definitely going through a sea change. I know a lot of the expats are leaving. Long-term Westerners that have made their life here are leaving. I don't know what the future holds here. I'm pretty grateful that I can leave at any time and go to New Zealand or any other place in the world. For me, I was raised in a democracy, so that's quite important to me. But for now, it's still very much got the British sort of trajectory. It's still there. I imagine it'll wear off. Like if I go to the swimming pool, it's Cantonese, it's English, and now there's Mandarin. So slowly that China.
Willy, you're killing me. You're moving around too much. You're hitting your microphone, and it's cracking.
Okay. Maybe I'll just Okay, good.
All right. So just like stay in one place. Don't play with the cord, and you'll be fine. I do the same thing, and I'm like sitting on an exercise ball, so that's why I'm like. People are like, Tone, why are you like moving up, bobbling up and down?
I won't comment. Anyway, I guess the audience is going, just shut up and talk about crypto, right?
Right. So, hey, so here's how we usually do the show. I'm going to take no more than 10 minutes, hopefully only 5 minutes. I'm going to talk about what I see in the charts, and then it's going to be all Willy with me asking him questions. So without further ado, let me jump into my own weekly chart. This is a very bullish development. As I've been saying since the end of last week, by being able to close above 15,000, it sets us up for the potential of not topping until, well, this week is almost over. Then next week will be the warning week in the MRI, and the week after is going to be the MRI top. So at this point, as I said yesterday and the day before, I am looking for a top in the $17,000 to $18,000 range. I do not believe this current push is going to take us to new all-time highs. I believe a top is coming sometime at the end of November or the second half of November. It may drag into early December. If it drags into early December, we can go as high as 18 to 19,000. But I don't believe we're going to break new all-time highs here. And then I think will be a pullback. At the moment, I still think a pullback to 12,000 is the most likely area. If we do get to 18, 19,000 in a slow, methodical fashion, that probably raises the pullback number from 12 to maybe as high as 14. And if we get to 18, 19,000 very quickly and have an exponential style top the way we bottomed here in March, then that actually opens up the possibility of a bigger pullback all the way down to as low as 10 or 11. Right now, I am bullish. I'm not, as I said yesterday, based on a daily chart. We broke out of this triangle. We were breaking it yesterday as I was live streaming, and I said I would go to my GBTC retirement accounts and probably get back in. Feeling a little disappointed. I sold over here at around 15.3, and now I'm forced to get back in at around 15.6. So I lost a little bit on that trade, but I played it safe. And here we are. I did not buy back in as much as I sold, but I did stick to my word and bought back some of what I sold back here. I still believe I will get a chance to buy below 15.3, but obviously nothing is guaranteed. 4-hour chart, the funding rate is still favoring a little bit of a pullback here. This is the 4-hour chart, hit an MRI top. Had a little bit of volatility here while making it swing high. This is a new 4-hour swing close coming right off a new 4-hour swing high. The CMF is flipping bullish. The funding rate is actually currently bearish. So this tells me that today is probably still going to see more upside. The daily funding rate is just now starting into favor the bears. So that means there's still plenty of room to go on the daily chart. Everything is still screaming bullish to me. The GBTC, what do you call, premium is now pushing 20%, which is a little bit high. Yesterday was certainly a much better, not that much better, but at least it wasn't 20 or 19. It was a few percentage points lower, not much lower, not that much of a difference. Bitcoin dominance is going back up. I would love to see it above this red line. I believe that's where the year started at 69. Man, I'm watching the slow death of Bcash, and like I don't usually like enjoying the misery of others, but in this case, there are always exceptions. Once again, it's at 0.016, which is incredibly low, and the fork is coming this weekend, so it's only going to get worse, I believe. I think that anyway, I don't know if Willy wants to talk about the U.S. elections. Probably not. Maybe as it relates to economics.
No thanks.
We're forking this show into having anyway. The stock market is giving you an MRI warning. I believe there's MRI warnings all over the place in the traditional markets, including if you go to the transportation index. I think there is, I think the MRI is topping there. Warning sign, the VIX. It's like no matter where you look in the traditional markets, things are looking very, very toppy, or in the case of the VIX, it's looking like it's bottoming. So lots of things can happen early next week, mostly due to the whole election insanity. I am done. I think that only took about 5 minutes.
Yeah, it was cool.
And I should do those videos. People would love those videos, like a 5-minute update. And without further ado, I'm going to let Willy introduce himself. I have all of his websites and links here. And as he's speaking, I will go through those links and then give him the screen share.
Oh, hey guys. As it says on the profile, I do on-chain analysis, which is extracting essentially demand and supply coming off the blockchain and using that to predict where the price goes next. And I now, 1 month into it, I write a market forecast newsletter based on that signaling. So you can go to my site at willywoo.substack.com, and there's a free edition, there's a paid edition. The paid edition gets the forecast.
All right, Willy, sorry, I got to intervene here. Any chance you can try your laptop microphone instead of headphones? Then we can check if that's better.
Better. It's got a pretty good.
No, it's way better. It's way better because there's no like static crackling. So this is significantly better.
Great. Cool. Yeah. So
one more thing. People are already asking. Yes, Willy is Kiwi. He is Kiwi, but he's obviously Asian, and he just travels the world and been living in Hong Kong. Let's get that out of the way because those questions will keep on coming.
Yeah. I was in New Zealand, but then we moved to Hong Kong. So yeah, and I'm really waiting for the world to open up. Anyway, so That's the newsletter. Feel free to sign up. I will put out there some of my analysis. Like, for example, the free analysis is like just research. Like I could show that Bitcoin is a decoupled asset. It is a safe haven through on-chain analysis. If you want the paid version, that'll give you every on-chain move, and it'll give you a fair idea. It's pretty reliable. It's a forecast of where the price will go next. You don't get price targets, you just get direction and the structure of the market. So feel free to sign up. That there is currently I just did a discount code for Tone's channel till Monday, 20% off. And yeah, it's been really well received. So enough of that. Let's have a look. I think I'm going to riff off what you talked about, Tone. Let me just share my screen.
Yeah. Oh, before you do, hold on. Also, guys, Willy does have a free website and a bunch of free resources at woobull.com, or specifically charts.woobull.com. So please go through all these links. This is all free. He references a lot of this stuff in his newsletter. This is his newsletter. This is the link to a discount code. It's actually just /Tone Vays. If you are going to sign up and would like a 20% discount, use the link in video description. And this is, of course, his Twitter. And on that note, I'm going to stop the screen share and hand it off to Willy.
Okay, thanks, Tone. Yeah, so let me just share a screen here. Can you enable screen share there?
Ah, crap. My bad on that. There you
go. Okay, here we go. Which desktop? That one. Let's do it. Share. Okay, here we go. You know, you mentioned we may top out near the all-time high and pull back maybe to 12,000 or lower. I just want to show this plot here. And, you know, one of the first indicators I did was MVT, which was billed as the price earnings ratio for Bitcoin. It just looks at how much volume is going through the blockchain, which is an indicator of how much money is going between investors. And it uses that kind of movement between investors to try and get an idea of where the fundamental floor price of Bitcoin is. So the way I look at this is like, this is where the price is moving, and the price moves between short-term traders, and they can, you know, squeeze price up or down. Like here, this was a short squeeze. Everyone was going short, so someone decided to take them out with enough buying power, and it squeezed them up. They had to buy back and cover their shorts, and this was the mother of all squeezes. And you can see this sort of float above this organic price, and it's very hard to go below it, because below that price, spot investors will continue to buy. We did get this slice right through in the COVID, and that was happening only on derivative exchanges. You can actually see the blue line stable. That meant that investors were pretty, you can see on chain that not a lot of coins moved. No one really, the long-term investors didn't sell through that. In fact, you can see that a lot of buying actually happened on chain, but the derivatives guys got completely you know, squeezed downwards. So in terms of what you were saying, we're going to 20,000 and then rejecting. I do think we need to test that. If it does reject, you can use this blue line as the floor. You know, it's kind of cushioning. And whenever it gets close, it bounces. It's like right now it's cushioning at $500 above, and it's trajectorying upwards. So if we go up to here, I think the lowest bound that it can ever come back down to, you know, go up to here around the 20,000 where that 2 is. It may come back down around here if the current trajectory of MT is going. What is that? 13.6. I would say 13.6 would be the floor where if it rejects from a 13, but that would be really hard pressed, because you got to qualify that with a ton of data that's coming in. Like a lot of the stuff I'm going to show you guys is tier 3 data from Glassnode, who've been kind enough to offer this for viewing through the newsletter and my work here. So you can sign up to them at glassnode.com. They've got free data as well, very good data. This one's very important here. What I'm showing you is this is what they call, they have very technical names, entities net growth. And so what that means is essentially how many net new investors are coming in to Bitcoin seen on the blockchain per hour. So, you know, so if someone's exiting, zeroing all of their clusters of wallets, they leave, that's in -1. Someone new, never seen before, we haven't seen that person, that's a +1. So generally in this band, we've been like 250 new people come into Bitcoin every hour. And then in this zone here, while I recall a lot of people were bearish, we were zooming up. We had the MicroStrategy announcement here. We had the Square announcement, and that really pumped things. And then the PayPal came in. So the PayPal announcement came in, and we were peaked. And if you were to look at how many people were signing up per hour on the long-term chart, let me zoom that out to about there. You'll see that we're in this, we hit this zone that was this doesn't show it as well because it's median. If I did daily, if I just did a simple daily without any smoothing, and now we do maybe a 30-day on it, you can start to see how significant this is. Like it's right up there into this zone here. If I go for a longer term average, you'll see it go even higher. And so we've done it. There you go. There. So, am I getting the latest? So we're well into this bullish territory, and right now where we're at, we had this big strong impulse of new participants come in.
Hey, Willie, any chance you can make your chart a little bit bigger? You do have room in your laptop screen on your right side, I believe.
Okay, can I go plus like that? Let's zoom the browser in. So we had this big impulse here, and that moved the price up. And then, of course, no one came in after this pump, but now we're starting to see this build again. And if you look at the flows of coins coming off the exchanges, you want to see this line going negative. So whenever it's negative, it's showing that people are buying Bitcoin and moving it into their cold storage or on-chain wallets, self-custody wallets. And we had this big impulse. This impulse I could show you on another chart, but I won't. This will do. This is a very ridiculous impulse. If I smooth that over many days, that was the biggest multiple day impulse we saw since like the fourth quarter of 2017, when we were just before we went into a mania phase of the bull market. And so that impulse there pushed us all the way up, and now we're settling, and now we're starting to get another impulse of organic buying from investors. So it's important to understand when people like say Michael Saylor, you know, Square Cash, Michael Saylor's friends, when they buy their Bitcoins, and they bought, what was it, like 35,000 Bitcoins for the company, he himself?
Yeah, at least. I think they did another round after too.
Yeah, this is like ridiculous amounts. He bought something like 17,000 Bitcoins on his own, off his personal fortune. And you can actually see, like, let me just pull this up.
What I find more fascinating about that situation is that Michael Saylor has now made it his job of being a Bitcoin promoter more than probably anyone else in the year 2020.
Oh, it's totally, you know, hardcore his stuff. Yeah,
like I just saw that he's following me on Twitter. I need to get him. Well, like I want to get him. I wouldn't mind having him on the show, but like everyone else already interviewed him, so it wouldn't be like what's the point at this point? You know?
Yeah, I mean that's like exactly. I was like, he follows me. Wow, okay. You know, it's like it's really inside baseball. I didn't think you'd go that deep, but so yeah, there's this chart here. This is from a while ago. I can tell you right now, it's plummeting. You want to see this go down. This is the stockpile of Bitcoins up for trading on all the spot exchanges, and this zone was when Michael Saylor was investigating Bitcoin for MicroStrategy. Yep, he must have told his friends, because roughly around here was when they started to buy it for the company. So you can see this. There's no proof it was him and his cohorts, but there's $2 billion in that alone. I think it's about $2.5 billion of coins scooped up now. Michael Saylor scooped up between 100 and 150 million for his personal fortune. So what we're seeing this is you can actually just see at the start of it, it's falling off a cliff. And that previous chart I showed is how this is essentially, yeah, this is like these guys calling up, whether they're buying it themselves, which I don't think, they were buying every 3 seconds or something. They're definitely using software, but ordinary people just call up a OTC desk and they will deploy all of their algorithms to buy across all the exchanges at the most efficient price for you and then deliver it to you. It used to be OTC was, I'll find you a buyer or a seller and they match it. But nowadays it's pretty much all off these exchanges. And you'll see that buying pressure result in the stockpile of coins on exchanges starting to deplete as these big buyers come in. So that's what we're seeing right now. I could let's go down like when if you look at this chart here where we were in this zone here, and I think a lot of people were semi-bearish. They thought this would go downwards. And in the letter I wrote, paid one, it was insanely bullish. The amount of new people coming in, which I showed earlier, was off the clock. And that setup led us to here. And I put out the letter right at pretty much this point. One of our friends said, "What's happening?" I said, "I'm writing a letter." And this is it. I have made it free to the public, which is pretty much the take profit and wait call. The short term was consolidation expected over the next 2 weeks, which is we're 1.5 weeks into it now, and then bullish thereafter. And the midterm is just continued bullishness. Yeah, I did a bit of breakdown. We had this huge impulse of coins coming in. Impulses of coins are very much vector changes in the price direction. When you get a lot of coins changing hands, the price is going to move one way or the other. In this case, it was determined bullish based on the amount of money being scooped up, injected in, and coins being moved off and new participants coming in. And what we've been seeing on the blockchain since over this whole, remember this was at this point here, we saw this chart here, which was, it's called SOPR. Guy by the name of Renato created this, and it's essentially looking at the blockchain and seeing, okay, someone just moved coins. When did they buy it? What price did they buy it at? What price is it now? You know, are they in loss or profit? And so this readout is showing pretty much an indication of people who are trading out of their coins, out of their wallets, real wallets.
Oh, can you click on that chart?
Thanks. So this might look like, for example, I'm going hell, that's a really good price. I'm going to send my coins out of my wallet into the exchanges, and then I'm going to sell it. And so you'll see that movement of coins out of my wallet into the exchange, and you'll see that I made a profit when I sent it. It's like, it's assuming that you sold it. So if you look at that, we're in that range here where there was a lot of profit taking. These are the profit takings. It impedes further upward movement. And so that's what's happening. And that was my call for a sideways ban. Sometimes a ban like that may mean you're going to reject that price and go downwards because there's so much profit taking, it's going to push the price down. But we had so much the downside on the setup that it was more likely we're just going to go sideways before that demand continues to push upwards, which is really much what's happening now. The best I make of the current setup is it's not as bullish as this zone here. We don't have the same fundamental setup, but it's still bullish. And I think that's what's, I think that's starting to play out now. Yeah, there it is. It's moving. It's broken above the ascending triangle resistance. I think it's got a bit more to move. I'm just waiting for the next on-chain signal. I just look at up or down. I don't look at price targets. You have to default to technical indicators to get to price targets. Right now it's up. And that's all I can say. And the other thing with this on-chain stuff is it doesn't move very quickly. You only get signals every 2 to 3 weeks. The structure changes 2 to 3 weeks at the closest. 6 weeks is the norm. We had a big structural change here. We had multiple structural changes here. That was a lot of buyers and different impulses. There was an impulse here that took us to here. There was another impulse that took us to here. And right now there is an impulse, and it looks like there's more buying happening here. But that's all I'm saying is the next impulse is up. Number go up, number go down. That's what I do. Yeah, so I think that's pretty much it. What else have I got here? We got this, we got this.
Hey, we got a question on that. We got if you go back.
Yeah. Oh, yeah. Which where?
Just whatever you showed earlier, the NVT.
Yeah.
That one. So you only have it as of 2018, and someone said that we spent an unreasonable amount of time below that blue line back in mid 2015.
Exactly. Right in there. That zone there was like the mother of all buy opportunities.
Right. So
there was ridiculous amounts of buying activity happening here, and it was not reflected in the price. I assume it wasn't reflected in the price because if you were around those times, there was right about that peak was 12.5% of every single Bitcoin in existence being stolen in Mt. Gox, right? It all just disappeared. Like that created this protracted bear season. Every bear season was very short. Bing, bing, bing. That wasn't actually a bear season. That was just a consolidation, actually. But yeah, like traders were used to these really short ones. Because I was involved in this zone here. I actually got involved right there. And it was one of the longest bear seasons ever. There was a scaling wars. There was all this FUD going on in Bitcoin back in those days. We didn't know if it would survive. Meanwhile, there was all this investment activity happening. And which bump was it? Do you remember when the ETF was, Tone? Was it?
I know. My life.
Yeah.
My life. My whole world. My entire existence revolves around Bitcoin price. So the original ETF announcement by the SEC that they're not going to do it was around March 15th of 2017. Right there.
I remember there was that scam. Remember that scam dump? And then it dumped. I don't know if you were trading it live, but
no, that was what do you mean? The scam? I know the big scam
there was a scam wick. It was like, okay, the SEC would make a deliberation.
Oh yeah. No, that was
it was like
a ridiculous candle. That was like. It was like March 14th, March 13th. It was like in the teens. It was in the teens of March of 2017.
It was like 1 hour before the SEC opened for business, and then it just went exponential, and it was like shit. Someone's
and I told everyone to, first of all, I told everyone that there's no way in hell the SEC would approve the ETF, and second, I told everyone to get the hell out because of what's about to happen, and people got crushed on both sides. That was like the ultimate Darth Maul candle.
Yeah, ultimate. Yeah, is it that one there? Bang, bang. Right.
Yeah.
There. It was much faster than that, I think. But well, anyway,
if you look at a single day's candle, it was insane. I still talk about it in my workshops. Okay, but there is a specific question coming to you about that range because you started talking about it before I actually. Yeah, so here's the day. I want March 10th. Damn, I was off by a few days. March 10th. I said in the teens, but it was March 10th. March 10th, 2017. I have it up. When I take screen share back, eventually I'll show it to people. Okay, so the specific question is, because we spent an entire year below that line, what does that mean for the current bull market? Does that mean that we shouldn't be expecting such a big run up this time? Because last time when we finally got out of that area, we went up 20x from 1,000 all the way to 20,000. But because we didn't have this that area of sitting below that line, that's the MVT line. Yeah, sitting below the MVT line, should our expectations of the high be significantly smaller, maybe 5x at best instead of 20x, due to the fact that we didn't have that kind of accumulation?
Yeah, it's the accumulation right now, and I will pull it up. Exchange balance, I think. Exchange balance stacked. Current exchange balance, thank you, Glassnode. The current exchange balance is when we're talking about accumulation. Okay, let's go back to say 2014. Okay, I want to show you the accumulation that's really happening right now. This is what I was saying, was a straight line. Remember, I was showing a screen capture. It's falling off a cliff. Yeah. And look at this. It's like February. Okay, we're in November. It's like what, 9 months, and it's still right. So this is let me turn BitMEX off because the rest of these are more spot-ish exposure. Okay, so you'll notice every single sort of, it happens more in a reaccumulation band. Here in that zone around the halvening, people started buying up, and it took the stockpiles off the exchanges. Here, I think it's very hard to take signal because it was a different world. Everyone was on chain at that time. We got onto the exchanges and we got out of there. Here you saw that, and here you saw a little bit in this bit here, this accumulation band, which was the last bottom of the macro cycle. Now we're just seeing this thing fall off a cliff, and we've never seen anything this deep or this long. 9 months. Look how short that one is. Look how short this one is. So there's a significant amount of accumulation. What MVT shows is it shows it's essentially inverse velocity. It's just how many coins are moving between investors on chain. And in this zone here, we had Mt. Gox die, and no one trusts exchanges. Antonopoulos was saying, I go in, I buy, I sell, I move my coins off, because you cannot trust exchanges. They will get hacked, they will exit scam. That was common knowledge here. Now we're in the zone where everyone's starting to put their coins on exchanges. They don't even touch the blockchain anymore. Like, there's 101 million unique doxed users. We know they're unique across all the exchanges, and there's only 24 million identifiable clusters of wallets belonging to people. There's a 4-to-1 ratio right now. There's, for every every person that's got a wallet on chain, there's 4 people that have got wallets on exchanges. So a lot of people aren't actually using self-custodial wallets. So what you're seeing here is the zone where all this investment activity is happening between investors from their wallets, and then it pushes the price up. What you're seeing here is a different era where you see a little bit of that investment, and of course the smart investors are doing that. Like Michael Saylor is not going to keep what 100 million or $500 million of coins on an exchange, but a lot of us little guys, may put their stuff and leave it on an exchange. And so this is why you see the discrepancy in the zone here. And it's a lot of this on-chain stuff is like this. It's like the era in which Bitcoin operates and changes over time, and you have to take that into account. And so I want to use that as a segue into MVT ratio. Oh, wait, no, let me finish the question. So if you did a ratio between this dude here, which is the price, and this dude here, which is the MVT, the organic price, you get this sort of up down movement, okay? And it's essentially how far we run up in trading activity above and something or more organic what investors doing. This is like highly FOMO driven stuff, and you'll see that as we approach the top of the bull market, it just goes FOMO way above fundamentals. And there's this interesting thing that happens, which I'll draw a trend line here. You can do technical analysis on just about anything that's a market or normal, natural. And we're just broken this downward trend line. Last time we break a downward trend line, the thing goes up. There, it's not as well defined here. It's pretty volatile. But then the last cycle, but you can still actually see it in the cycle. The last cycle, way back in 2014 to 2016 zone, we broke here, which was just before the halvening, and that's our run-up. And we've just broken. This is actually a half a week old. We're actually higher, slightly higher here, but we're on our run now. And then I want to take you back to the good old original MVT. And MVT is billed as the price earnings ratio of Bitcoin. So it's the ratio of how much investment activity is to the price. So you want to see this thing low, a low valuation compared to the activity in price. And so we're hit that buy zone. It's actually better to buy now with safer odds than it was down here. So yeah, it's certainly bullish. Long term, this is a super macro thing. It's super long term. It starts to signal sell a little bit late, but after the top of the bull. Here we're like in that buy zone. Last time we're in that buy zone was here. We're in the buy zone here. We're in the buy zone here. So it first touched the buy zone in the last cycle there, and we just went straight up. And we just touched it again. So yeah, we've got a bit of work to do to get past the 20,000 right there. We get past that zone. We might sort of reject. I don't think we get a very strong rejection. Remember, we'll probably, I don't think we can reject that hard actually. I think we won't go too deep. Maybe we go down and sideways, but I'm just guessing from a gut feeling from what I see on chain, and then we'll go up. We'll explore new highs. So, and if you want to look at some fun models, where are we? Let me grab price models. This price model chart's always a pleaser because it's got a massive amount of models. A lot of them are organic valuations here, valuations for the floor price. But the green one is a very simple model that just takes the cumulative moving average and multiplies it by something like 35. It's hit every single top. And that top right now is $85,000. So like, I think that the next top is maybe around December, because people tend to sell to pay their taxes. And in the tradition of Bitcoin, we generally run up massive in 1
Wait,
year.
which December? This or next?
2021.
Okay.
2021. Like the last, like if you were to go back into this zone, I remember it clearly. Like the December of 2016, which is where we're with same zone after the halvening, in approaching December, it was just, yeah, number go up. And then here, a lot of people made profits and it was number go down. We got to sell a lot of Bitcoin, a lot of shit coins, a lot of everything to pay our taxes. And I think we're going to probably do the same thing. So if you look at December 2021, you sort of eyeball where that green line is. Wow, we're probably 150 to 250 is the top next year. I don't do price targets, but that's what the model says.
That is very optimistic, beyond my expectation. But hey, I will be happy to see that.
I mean, somewhat supported by that mother of all scoop ups from that chart I showed earlier, right? It was
Right.
I was like, I've never seen anything like that before, and it's pretty. Oh my gosh, I've never seen that before. But you got to bear in mind that like we're in the age of exchanges, and let me I'll finish this with this chart, and then I'll run it to questions. Let me find the right chart here. If it's okay, here we go. This is, I believe, correct. Okay, this is a study I've been doing. So we started here. There was Satoshi. There was one user on the blockchain. This is Glassnode's work, forensic clustering of wallets. So we're currently at 23 million wallets. 23 million wallets. So this red line, so this is how many wallets this is, sorry, not wallets, this is how many users are using on-chain wallets. And this is a survey done across the industry by the Cambridge Centre of Alternative Finance, and they just put this out quite recently, around September of this year, and we're at 101 million unique 101 unique doxed accounts. So actually, it's likely it's higher already because not everyone doxes on their exchanges. So that shows you how the difference between the two is the rise of exchanges. So a lot of activities happening on the exchanges, a lot of money's on the exchanges, and we can see a lot of money being scooped up off the exchanges, where we didn't see as much here because there was less. I mean, I should really do this chart as a percentage depletion of stock, and it might be similar in percentage terms, certainly not in length. I've never seen it so protracted. I think that Bitcoin as an anti-inflationary hedge is really coming into this. So yeah, over to, I guess, questions.
Well, in the same breath, I actually like that PayPal users number on that chart.
Yeah. I was doing that around the PayPal time just to put it on a chart, and actually you'll see there's a little influx.
Okay, let's be clear. That's not PayPal Bitcoin users. That's literally PayPal users.
Yeah, that's literally PayPal users. And I wanted to put this on a chart together because I wanted to see when do we beat PayPal in active users. This is active users. This is on-chain active users. This is doxed users. I don't know if they're active or not. interesting for me to see is that inflection upwards at COVID.
Right.
On,
But also keep in mind, for example, I am 2 users on PayPal, my personal and my business. So,
yeah.
so that doesn't separate. Like, for example, though in the crypto space, I could be 1,000 users, in crypto. So I
Well,
don't.
in the crypto space, you can be one user on chain because this takes it into account, right? This is clustering of wallet addresses saying, oh, look at all these coins moving between each other. That is one cluster of one person. That's toned. Okay, so this is unique. This is unique. This is oh, well, you're saying you one for your business, one for your personal. Well, Michael Saylor and MicroStrategy, right? They are two
Right.
separate entities.
Yeah.
So anyway, like it's interesting to note the trajectory. Like, let's pull this chart over a bit and go, well, maybe we cross around here. This is the lower bounds. This line here is the upper bound. Maybe we cross around here. So by 2025-ish, we'll have more users than PayPal. And, the population of the world is somewhere in this zone here. This is a log graph. Somewhere here, PayPal's here, Bitcoin's here. So, and we're encroaching, like let's do this 2030. If this zone here, roughly where that dip is in terms of, it's on the dollar axis, of course. Bitcoin's moving up like this. It gives you an idea of the time it takes for us to, for Bitcoin to swallow the world, software to swallow the world in finance. Maybe 10 years. Not long, actually. Not long in generational terms to do a step transition change in the structure of finance and money.
Okay, so we have another question that is similar to that last question, but this time it's in terms of time and not in terms of price. About since the price spent so much time below NVT, did that contribute to the big 20x move? We didn't spend almost any time below NVT this time around, so we shouldn't expect a 20x move, maybe a 5 or a 10x. Now it relates to time. Willy, do you believe in lengthening cycles, meaning that the 4-year cycle is flawed? Some are saying 6 figures could wait until 2023. I just want to throw in a quick comment on that. At the moment, it feels like Bitcoin topped at 20,000 in December of 2017, and it has now, and we can top. By the way, we just made a new swing high. By the way, Willy, at 16,180. But so we can easily get close to that 20,000 this December. It's very, very possible. So that means it took exactly 3 years for Bitcoin to come back to its prior all-time high, which is the exact amount of time it took for Bitcoin to come back to its prior all-time high at the 2013 top. So the 2013 top came in November, let's call it December, close enough. And then it topped again in 2017. So actually that took 4 years, not 3, I'm sorry. 2013, we topped, and then we topped again in 2017, December. So it actually took more time to get back to the prior bubble-ish top of Bitcoin in the last cycle than current cycle. What does that tell you? Because to me, that was very unexpected. I expected the length of time to increase between the peaks, not decrease.
Okay, so yeah, I'm not a believer of it. I actually answered this in August here, and someone just asked me on the letter as well. So I guess it's a popular question, and of course it's important because the longer it runs, the higher the price will go. And essentially, this chart tells it. So here's the run up there. It goes down, run up, go down. It goes down, and like the lengthening cycle believers, the cult of lengthening cycles is looking at that peak, that peak, that peak, and they're going, okay, 1, 2, 3. Okay, so there's 1, So there's two prior sample points where one was longer than the other. Like, what the fuck are you thinking? Right? There's no underlying fundamental reason other than curve fitting. So this is the initial genesis of Bitcoin. At this point, we have a supply shock, halvening, right? Less coins, half the amount of coins that can be sold onto buyers on exchanges. We have another halvening. So these supply shocks allow the price to run up because demand supply. You've got the same demand because Bitcoin's in an adoption curve. It's a S curve. It's quite a steady climb, and so that steady demand is met with half the sell pressure as miners get half the coins to sell down onto. So of course we get these run ups, right? You get another run up. You get another run up here. So this is what creates our 4-year cycles. The 4-year cycles is because the halvening is pushing like a wave in a bathtub. You just push every 4 years, it starts to slosh every 4 years. And so where it peaks, you can't predict that. It depends on how much FOMO happens. It depends on how quickly people react. It reacted very quickly here because it's a very short, small amount of investor activity. It's like trading a shitcoin. If you've ever traded a shitcoin, you'll notice that the price moves very quickly because there are only a few participants. And when there's a big ocean of people, it's a little bit slower. So that's doing that. But we're trapped into this gravitational lock of these 4-year cycles. So what I think will happen is that we're locked in these 4-year cycles and eventually these happenings will get smaller and smaller and smaller until the point where the sell pressure reduction becomes negligible. And then you'll get pulled into a gravitational lock of correlation to macro assets, which is roughly 10 years. So we'll probably do this 4 years, and suddenly it'll look a bit weird, and then it'll snap to 10 years into a new orbit. And so, yeah, no, I'm not a believer of the lengthening cycle. The cult of the lengthening cycle.
All right, okay. That was very well said. But also speaking, what the fuck are you thinking? People mentioned earlier that at some point on your previous appearances on the show, you borderline, very slightly spoke positively of some shit coins like Decred. Any updated opinions on that?
Yeah, I've been thinking a lot about in the last, I guess, I think the first time we talked about Decred was like first time on your show, right?
Well, probably. I think we had this discussion in like Kim.com's house as well.
Okay, all right. Here's the thing: is like the last few years, I've come to realize this thing that's very important because in the 2017 phase of the crypto market, everyone saw that anyone who did any kind of technical sort of prowess would get these FOMO pumps. And there was even a hedge fund. I remember them talking. They would scan GitHub for activity. If there was good activity in a project, they would buy it and it would pump more than others. The thing is with these networks is that they're partly technology. Like Bitcoin has to be solid. It has to be hard money. It's got to be hard to break. If it does break, it's screwed. Technology comes into it. Like Ethereum, some of the things is it's the first Turing complete chain, so all these developers are on it, and it has driven a lot of FOMO because it pulls in a lot of economic activity as these apps start to interact. And so that's important that the technology is there, but there's this other thing that's really important, which is these are all financial instruments, despite being computing instruments, smart sort of contracting stuff. And if you don't build the financial side of it, you're screwed also. Like for Decred, I remember, my friend Chris Beniski went up in 2017. He spoke to a audience of about 100 hedge fund managers and said, we're going to buy Decred. And we have bought Decred. And there were a lot of hedge funds lining up to buy Decred after that talk. And they would call up the core dev team and they would say, how do we buy Decred? They couldn't buy it because if they bought it, the price they couldn't buy enough of it without mooning the price. There was no liquidity. There was no exchange listings. There weren't liquidity providers being engaged to allow people to get in and out. And I remember talking to that team and going, shouldn't you be developing this stuff? And it never got developed because they were such purist developers, A-list developers on the level that, they were core devs originally, but they didn't develop the market. And I think that's what, that was the problem with Decred, is that the liquidity was never developed.
Yeah, I stole your screen share, Willie, because this week, Decred hit an all-time low, and it's down 90% since it went up on Binance. I don't know. I can swear it was created earlier. Maybe I picked the wrong exchange. Hold on. Decred versus Bitcoin. Does Poloniex still even exist?
Yeah. It got Justin Sun bought it, didn't he?
Could have been Bittrex. Anyway, I think Poloniex would have the longest data. Yep, there it is. Okay, so it's not exactly an all-time low. It's getting to an all-time low.
The really interesting thing for this chart, can you check into log?
I thought I'm not in log. Okay, there you go.
So the real interesting thing here is whether or not it pulls, because it's currently on a support level where it sort of had that inflection point way back in 2017. And like,
well, that's probably when Chris Berninski stood in front of a bunch of hedge funds with a book full of stupid, convincing them to buy into Decred.
No. What happened was I started buying it roughly where your pointer is, one candle to the right. I started buying it there. And then he got told about it by a lot of people. And then I said, yeah, I'm buying it too. Just shut up. Don't tell anyone. and so he did very well out of it. And then it was near the tail end of 2017. So it was around, if you move the points, it was around Consensus Invest, I believe, around November, December, maybe around near Christmas time, 2017. So
then that's great. Then I hope
1 year later.
Then I really hope all those hedge funds lost a lot of money.
No. What, like 2018? Point your pointer on 2018 with that dip.
December? Like here is June.
December 2017.
That's here.
That's June.
December 2017 is down here.
So in that zone here, he was saying this was an interesting buy, and I think that may have driven the price upwards. And it actually got pretty fervent near the top before it just died the slow death.
In any case, this thing is still down 70% since inception. So great investment, guys, if you bought in when
this is the thing, is like I have this tweet that was quite popular, and it's really when you're going to invest in altcoins and if you're going to hodl them rather than trade in and out, what you want to find is whether or not they can last a full 4-year cycle going sideways. This is in Bitcoin basis, right? So if it's going sideways, which Decred currently is, it hasn't broken below that low of 2017 January. If it stays above that, then it may get into the classification of oscillator. It just oscillates up and down sideways. What that means on this chart is it oscillates around Bitcoin. So it's in gravity lock around Bitcoin, and it'll just number go up with Bitcoin because Bitcoin's carrying it and people trade around that. Ethereum's in that category, Litecoin and Dogecoin.
Hey, any other shitcoin you want me to pull up?
I don't really follow too much, really, in altcoins. For me,
perfect.
like altcoins.
Then we're gonna go back to Bitcoin. I want to hey, here's that candle you were talking about. This is the day of the SEC announcing for the first time there won't be an ETF, and the range of this candle is 40% of the price of Bitcoin. Imagine if we had a candle today that spanned 40% of Bitcoin in one day.
Wasn't that COVID? Maybe that was 2 days. But didn't recover quickly.
Well, that was, I don't think it was 40% in one day, but it was also like mostly one directional. This was up and then down and then up. So this was in 24 hours, we like basically had a range of 40%.
Yeah, wow. Yeah, no, it'd be great to catch those tops and bottoms if you're a gambler.
Yeah. On COVID, I'm trying to see. Oh, yeah, that was also a disaster day. Well, it was over 2 days, though. We had a 2-day range of, 50%. Shit. So it has happened.
One candle, right? Yeah.
Well, 1.5. One candle was 40%. Yeah. And then you add a second candle, that's 50%. That was insane. And
the amount of buying there was ridiculous too.
And I am literally in South Africa trying to decide what I'm going to do because if I did not buy my flight back to the US, I'd still be in South Africa.
Right. Yeah, because the whole lockdown.
Yeah.
Yeah, I remember. You invited me over, right?
Yeah. I'm like, holy shit, Willie, there's good kite surfing here. You should come. Literally, that happened like the day before.
Right, I was the only guy with a voice of reason saying, you need to cancel everything and lock down. This whole thing's going to shut down. Remember you were doing the conference? You were like, as if, yeah, we're going to have a great time. Okay, we're not going to even get there.
Yeah. I'm like flying out to Africa in early March. I'm like, hey, we're having a conference. This is fun. Anyway, what are we? I have a few more questions from the audience. I also do have to correct myself. It was the exact same time. So it did take us exactly 3 years to get back to the top. We topped in December or November, December of 2013. We reached that level again in going into the beginning of 2017. So around December, January 2017 is when we came back to that $1,200 area. And then it's taken us exactly 3 years to get back to that $20,000 area, because I think as long as we can hit 18,000 on the current run up, that to me is a double top with what happened 3 years ago. So they both took exactly 3 years, which is interesting. But I was wrong earlier saying that the last one took an extra year. It did not. They were exactly the same. Okay. Yeah, go ahead.
Let me just grab this. I want to like turn this into Tone Vays shitcoin channel.
You want to show something? You want me to show something?
Can you share the screen?
All right. What do you want me to show?
Share the screen. I don't know. Just share the screen. Oh, can I?
I'm looking at other.
You banned me from sharing the screen.
I banned you? No, I didn't ban you. I have to just stop sharing.
I'm pushing the button. I cannot. Well, you got to close your share. Okay,
I have to close mine. Yeah, now you can do it.
Okay. I am going to show you Bitcoin dominance. The thing with, like, I'm not against altcoin toners. I'm not against them. I think they provide some level of innovation. Outside of hard money, Bitcoin's got the hard money thing down. And the original innovation of Bitcoin, altcoins across Bitcoin is that they were leverage instruments. You could go long only leverage instruments. So you could actually buy into altcoins, ride a gain against Bitcoin, then sell out. And so you could trade it. And before we had derivative markets, less need to do that now. We've got lots of leverage markets, futures and whatnot. So for me, I just, over a bull season, I might just go low leverage long and just sleep on it once I'm sure of the fundamentals. So low that liquidation is, way down below the bottom. So you don't really need to be in altcoins. You can if you want. They do trade easier if you want to trade the shorter time cycles. Right now, this is Bitcoin dominance. This is Bitcoin against the total market cap of alternative coins. And I can actually see it moving. It's just ripping out of this channel. We're on a weekly TD8. This is going to get Tone in trouble because he's not allowed to use this indicator. But this is, we've got another week before we can test the TD9. Let's see. Bitcoin's got a good week up its sleeve before altcoins might get a little bit of a reprieve. We wouldn't want to be in altcoins right now. Yeah. Oh, Tone, I did this thing. I took your love of the TD and I put it on RSI. It's actually pretty good.
Oh, really? I never thought about doing that. Yeah. Can we get you to start using the MRI?
The what? The MRI. Oh yeah. Sorry. Let's turn this off before Tone gets into trouble. There you go. So yeah, we're in this volume profile band here. I mean, altcoins will probably catch up soon, and no doubt it'll swing back and forth, and take your pick. The good thing about altcoins is that you can hold them with your private key wallets. It's a lot of work. It's a hell of a lot of work. But you can hold them, and so you're full custody. The exchange can't get hacked and whatnot. So somewhat, if it's say Ethereum, you're only going to do a switch between Ethereum and Bitcoin. It's pretty easy to hold that one coin, and if you're going to hold that swing for say 3 to 6 months over a bullish swing, then that's probably you're going to mitigate counterparty risk than going leverage long Bitcoin, but it's obviously a different trading pattern. So I've got nothing against altcoins. They're good trading instruments, and they do sort of play around with alternative use cases. Like for example, the DeFi stuff that was a lot of Ponzi games between projects that weren't ever going to be great long term, but they were really interesting experiments. And I think what we'll get is the sort of rise of DEXs, and those DEXs will most likely be on some sort of protocol. And I mean, I'm just relishing the day where I can, private keys trade leverage long or short Bitcoin without having the exchange go down, say the SEC shutting it down, that sort of thing. So I think that there's merit in that sort of technology, but yeah, I think also the most interesting thing about crypto as an impact on the world is really hard money. I think a lot of the altcoiners talk about this stuff as Bitcoin as a pet rock because it doesn't do anything, but actually it's a very powerful notion. The redefinition of the money we use. So yeah, over to you, Tony. I'm gonna cut this.
No, I was gonna say, someone asked earlier, all the on-chain analysis that you do for Bitcoin, can it apply to shitcoins, even the more liquid ones like Ethereum or Litecoin?
That's a really good question. The answer is generally there are exceptions, but generally no, it doesn't apply to shitcoins because they're so manipulated that whatever you see on chain gets blasted out because some whale rolls over and crushes the market. And then second, so you got that effect. The manipulation is rife on altcoins. The other side of it is that even if for the more organic coins, like Ethereum is actually quite organic. Even then, you may look at the on-chain structure of Ethereum, but then Bitcoin does something and it moves with Bitcoin. So it's sort of trapped between two things. And it's if you know, like for me, if I'm trading altcoins, I'll look at what Bitcoin's doing first. I don't think there's a very good altcoin trader out there that doesn't look at the Bitcoin price chart. It's a little bit like trading correlation with the SPX, the stocks. Like if the stocks are going to go down, then you might think I don't know, like, is that right? Yeah, the Bitcoin goes down with it. So very tight correlation that we've had with stocks. I think that's breaking now, but with altcoins, it's always been super tight. So you need to watch two charts at the same time. And it's the same with on-chain. You have to look at that structure and Bitcoin structure. And then ultimately, I decided, why bother? There's a zillion altcoins out there. There's Ethereum, you get a bit of signal, but it's not very accurate because it'll be pulled by Bitcoin. So I've chosen to focus on that, and I don't want to be promoting altcoins.
Well, it's dangerous to promote altcoins as and I hate this word influencer, but that's the word for anyone that has a large following. You are an influencer by default, and it's dangerous to promote them because the probability of that altcoin, having some kind of a catastrophe is very, very high. But I will always stand behind my efforts to promote Bitcoin since I started becoming a public personality. So the risk is just not worth the reward. The reward of being right about talking positive about an altcoin is insignificant to its risk if you care about your reputation. It's just not worth it.
Yeah, it's I mean, even from an integrity point of view, I think because if you get a lot of followers, you'll get a lot of every bull market, you'll get a lot of new followers coming in, and they'll be new to the market. And there's only one thing you can really recommend to them, which is Bitcoin. The altcoin stuff, it's fine if they want to do their own research and go deep into it. But like that whole field is full of scammers. There are so many people out there marketing their coins. You look at XRP, and their whole business model is to promote this coin. They've got a whole army. They run a multi-billion-dollar business, and the revenue model is selling that coin. There's no revenue generated from movement of funds with banking partnerships. So it's all of that was just marketing, and they dump coins onto people, and new people in the industry don't realize what's really going on. There are a number of altcoin projects that are legitimately doing good stuff, but for a new person, they can't see that from the rest, and they'll probably get bought into the hype and catch every pump, or want to dive into every pump and catch the top because it's manipulated. So I just don't think, and I don't have the bandwidth to cover all that stuff, and I don't have the interest to cover all that stuff because it involves a lot of technical reading of white papers and networking into the teams to figure out the personality who's involved. Like if you're investing in a company, like a startup company, you need to know who's involved and how they approach things, how they think about things. So it's way too much work when you've got like 1,500 altcoins out there.
Okay, so since we are talking about shitcoins, one last one, and then either we'll move on or we'll start to wrap up the show. Vays won't even admit Monero is a solid coin. That is correct. Calling all other coins shitcoins, that is also correct, is like loving gold and ignoring that other metals exist and are used as money. That is also correct. So I completely agree with you, Mr. Michael, because all other metals, while I'm not going to deny their existence the way I don't deny Monero's existence, I'm not yet delusional, even though it's time to get out of the bunker. Shitcoins do exist. I don't deny their existence. Silver, copper, palladium, platinum, they exist. I don't deny their existence, but I make the argument that they are shit money and they should not be treated as money, and no one should ever invest in them for the purposes of money because it makes no sense. Now, I can have a nice 1 hour long video explaining why that is, but that is my position. You don't understand my reasoning for that position, but that is the position, and that is the correct position. Willy will disagree, and if he wants to discuss this a little bit more, we can.
Yeah, I mean, that's an argument of ignoring, like gold, silver, copper. From a altcoin perspective, like there may be altcoins that are challenging, the pet rock, as you might say, the thing that doesn't do anything, but just is secure that you can pack money in, right? So there. Do we need a Litecoin? I don't necessarily think we do, but a lot of the other stuff there is not competing like a metal. You've got gold, and then you've got something more akin to the internet. Like it's how can we digitize gold and then put it onto another network and do some really interesting things with it? So I think that'd be more of the comparison. I'm not really interested in silver to Bitcoin's gold. I think that game is won. It's gonna. I don't necessarily. I haven't thought much about this, but is there a reason for Litecoin other than being a test net for some of the technology for Bitcoin? I don't know if there's much more use for that. And we tend to see in digital realms, when there's a network effect, and Bitcoin does have a network effect from its liquidity, it's very hard to have a challenger. Do you see another Facebook competitor? Do you see another Twitter competitor? Like, it's usually one that fulfills one role, and it's very good because there's no point in having two.
Was that a question to me?
No, I was just.
I wasn't sure. Okay, so look, I'm going to mention real quick why silver and platinum are not money, and you can extend that concept into the shitcoin space of crypto. But I do want to talk about one specific story when it comes to platinum. So the reason why silver is no longer money, and this was explained very well in Saifedean's book, The Bitcoin Standard, is because the reason why silver was ever money is because gold needed a micropayment in the history of gold being money up until the 20th century. But in the 20th century, and maybe even in the late 19th century, modern banking, and I'm not saying modern banking is good or bad. This is not a conversation on modern banking, but modern banking going to paper money backed by gold allowed gold to scale to micropayments. And by allowing gold to scale to micropayments, the silver to gold was no longer necessary, because the only purpose silver has ever had as money is to be a micropayment. If you can subdivide gold to buy your cups of coffee because of modern technology, and back then it was paper money, today it would be digital money. Like if the government suddenly, I don't know, was brainwashed into actually running a proper financial system, we would all have a digital currency. There would be no paper currency. We would have digital currency fully backed by gold. And if that digital currency is fully backed by gold, it can now scale infinitely into micropayments. I mean, that $100 million subdivision in Bitcoin is a computer science limit, and I understand that. So, but you can have all kinds of scaling to the pennies, to the smallest unit with gold as money. So silver is just no longer needed. Platinum is a very interesting case only because of one specific story. During BitBlock boom, I wish Willy would have made it to that. That would have been cool. During BitBlock boom, there was the following story involving platinum. So this took place, I don't know if it was Germany or another country that was taken over by Germany in the 1940s. I believe it was during World War II, not World War I, where a prominent family saw the problem coming. And what they did was they were selling all their assets for like a year or two going into the whole lockdown. And now let's not talk about lockdowns. I'm still a little still depressed from what's happening. And so what they did was they started converting all of their assets, all of their wealth into platinum wire. And what they did was they then molded the platinum wire into hangers for your shirts and coats. So when it was time to get the hell out of the country because it was being taken over, and they're checking you at the border if you have any money, any wealth, they open the trunk and they just see a bunch of clothes on hangers, and they have no idea that those hangers are pure platinum because they had all of their wealth in the hangers. And they can't tell this to even their closest friends, because if anyone finds out, that's how they're moving their money out of the country. Now, that is different. That is not money. They didn't do this into platinum because platinum was money. They did it because platinum was just valuable. They could have done the same thing with art. It's very difficult to move, a big painting out. But if it's just a rolled up poster, it's a lot easier to smell. You can even mail the poster, right? And like they're not going to know how valuable the art is inside that poster unless someone at the mail office is checking that. So this is more transferring your wealth in something that is valuable. That doesn't make it money. They weren't going to be able to use these coat hangers in commerce. And Bitcoin could be used in commerce. And that's the difference. That's what separates Bitcoin. So if you're going to make the argument that that platinum coat hanger situation is a reason to use platinum as money, you would need to now make a technological reason as to why a shitcoin is better money. So in the case of Monero, you would have to make the argument that having privacy in your altcoin makes it better money. But now you have a big battle ahead of you because you need to convince the majority of the world to agree with you that Monero is better money, and that you're way behind the ball because no one uses Monero. So while you may personally feel that Monero is better money, it will never be as decentralized as Bitcoin. It will never be as secure as Bitcoin. It will never have the same confidence of the people that there will not be infinite printing of Monero. And in fact, I think there is infinite printing of Monero. So Monero has all of these other properties that don't even come close to Bitcoin. So just because it may have one property for now that is considered better than Bitcoin, that doesn't make it better money overall. And because of Bitcoin's ability to scale, and because of Bitcoin's ability to add privacy, which we all believe is coming, it's really a bad investment to put any savings into Monero. But if you want to convert your Bitcoin into Monero, make your transaction, and have someone on the other end convert that Monero back into Bitcoin, that's fine. It just doesn't seem like the smartest thing to do because I don't think it adds you much. You also lose that privacy as you're going in and out of Monero.
I'm curious to see what privacy does come into Bitcoin. It'd be a really interesting event if it did happen. If it's doable. It's challenging, but if it was done, a lot of the reason why Bitcoin has made such a headway into the world is because it is visible on the blockchain, that forensics companies can come in and do the song and dance and say, oh, we can see there's clusters of wallets and where it's coming from and see the flows of money. And because you can do that, you can, like the compliance guys can say to the regulators, we're doing the AML stuff at very high resolution. There's no reason why you can't let us, list Bitcoin as an exchange or, use Bitcoin in my bank because I've got a way to do AML procedures. And so in that, it's allowed Bitcoin to bridge into traditional finance and provide that sort of gateway for investors to come in, and regulators are happy with that. If Bitcoin became private, I think it would really shut that influx of capital down. And so I don't know if that's now the time for that to happen. You can see that like as things become more regulated, coins like Monero started to get delisted. Like for example, yeah. So Bitcoin's transparency has been very, very important in this space to get adoption, and there's nothing in that technology that's going to stop regulators say no, you cannot, have access to banking. You can't have, like in the early days when Bitcoin had a very bad name, it was drug money, terrorist money. A lot of the banks would block your payments if you wired it into an exchange to buy Bitcoin. So yeah, it's interesting, this privacy thing. If I was to think of Bitcoin's use case for the world, it's to provide us with an honest money, and that has huge implications for the world and how the incentives. Like we make very stupid decisions because of like oil dependency. We're on oil infrastructure because of the petrodollar regime. So that those types of decisions are, based on the structure of the money we use. And I think it's more important that Bitcoin becomes a very, very large asset class before it gets things like privacy. I just think that it's more important. Tone, where are you?
Okay, I was muted, sorry. So we do have to start wrapping it up, mostly because I have to do an interview at the top of the hour. So Willy, thank you again for joining us. This is Willy's Twitter. I'll let him, say his closing comments right after. I just didn't want to forget doing screen share and showing his stuff. This is his website, woobull.com. Also check out charts at woobull.com. Willy does have a newsletter that he recently started. And as you mentioned, Willy, by having this newsletter and being more publicly accountable, it probably has made your trading a little more, responsible in your personal life. And if you want to sign up for this newsletter for the next 5 days, there is a 20% discount code in this YouTube video's description. So you can pull down the description and you can get a 20% discount on Willy's newsletter if you are interested. And I'll give you the floor, man, to close us out.
Yeah, well, thanks, Tone. The newsletter has really helped. It's added this discipline because I've got to be on top of the market when the market's moving, rather than when I feel like it. But yeah, it was something that was asked for, and I'm really glad I did it. Just big thanks to everyone who's subscribed. It's made it happen. It's been like a really fun thing. And it's become this vehicle that I'm really enjoying. So big thanks to the subscribers. And I hope to provide more value. One of the things of this newsletter, the idea behind this newsletter is you can see so much smart money coming into the field. Like the big guys from Wall Street are coming in, and they're hiring, they're buying data from Coinmetrics, Glassnode even, and they have dedicated analysts that are looking at the structure of the market and doing very sophisticated trades off it. And part of my endeavor is to provide the same sort of intelligence to retail, all of us, so that that kind of differential between the two doesn't get exaggerated, because you don't want all the coins hoovered up by the Wall Street and to create the same sort of game again. So that's what I've been thinking about with this letter. Anyway, thanks, Tony. It's been fun.
All right, you are welcome, Willy. Gonna jump on screen share one more time. Hopefully, we will still do Unconfiscatable in April. That is the plan. That is still the plan. Waiting for the whole election process to end so that we know if Corona ends or not, based on what happens with the election. And but that's the plan in Vegas. Willy's been a part of this before. Hopefully, he'll be able to come and be a part of it again. And he is certainly a big part of the financial summit in Bali, which had been postponed this year into November of next year. So, of course, that's another place where you guys will certainly find Willy Woo next November. That's it for me. If you guys want to support, check out Vays affiliate page. I need to add Willy's newsletter in here right next to Ugly's newsletter. And thank you all so much for watching, and see you all on